Hey guys, what's going on? It's your girl Aisha McNeil. I did not forget about y'all. Listen, today, we're going to talk about inflation, and what is going on with the mortgage. Not even just the mortgage, but let's talk about what inflation is. Okay? Inflation is the rate of increase in prices over a given period of time, guys. So what happened is inflation is typically a broad measure, of course, when we talk about inflation, right? But let's go ahead and narrow it down and say, hey, is the overall increase in prices and or the increase in the cost of living in a country like the United States, right? So we have an increase in the cost of living. That's why people are looking at how to create more money or more how do you say it? I can't say good. You need better jobs, more jobs. I don't. It's just different opportunities for other people to increase their money flow, their cash flow, right? So, but then here you trying to increase the cost of living by maybe adding another job or maybe trying to invest, with a risk of losing at the same time of course of the risk of gaining, right? So the three main causes of inflation is one, the demand pull, the high demand of food, the high demand of homes, the high demand of loans, the high demand of, it's a high demand of supply, right? Supply and demand, economics, right? So then there's the cost push, right? So how much is it costing? Is costing more than what you normally pay, right? Then inflation expectations. So that's what's broadening, causing the inflation is the cost, the demand, the supply and demand. Um, Less supply, the more demand. Okay, so the cost goes up, and what do people expect? And inflation. What do they expect? They expect inflation to take a course of extending, whether it's months or years, right? So now they have to estimate how is it going to affect the long term in the country. What are we seeing today? Let's talk about us as individuals. What are we seeing today? We are seeing high prices in whether it's gas, excuse me, whether it's food, whether it's homes, whether it's loans or credit cards, right? So this is what's happening. There are savings accounts now today that are offering 3%, and your money does not have to be tied up in a CD. So then there are banks offering you a CD at 3%. But American Express is offering a high yield savings account with no minimum, and you're getting 3% on your money without it actually being tied up. So as the rates go up, you're actually getting more money in your savings account if it's a high yield savings account. That's a good thing. So if you are out there and you're going shopping, the eggs that you paid 95 cents at a particular store and is now $2.75. And then from that last week, it went up today to $4.75 for the same eggs, the same 12 eggs, the dozen of eggs that was 95 cents and $2.75 last week is now $4.75. That is inflation. That is the high demand of something now. The same eggs are at a higher demand and the price goes up, right? Because they are expecting inflation to last. So the business owners, whether it's farmers or anybody, is selling their product at a higher value, and the business have to pay a higher price, and the business have to pass on the higher price to the consumers. That's what's happening, right? So now we look at the mortgage industry. The mortgage industry, the lenders, also a business, have to pay more money to get money from the feds. Once again, in my previous video, I told you guys, it's affecting the lenders and the risk that they once used to take are not taking right now. So let's just say if the risk was okay, this person have okay credit and the DTI is good and the income is good, but they have okay credit. I don't think I want to give this person this loan. But if a person who has great credit, has a great DTI below the maximum, and has the income, they probably going to go with the one that has the credit, because the credit history says this person pays the amount of money, pays back. This person is in 700 and 800. They typically pay their loans back. In fact, they had a high loan of $100,000 and they paid it back less than 30 years. A mortgage that was in 2.5 years, they paid it in 2.5 years. So who am I going to take the risk with? Am I going to take the risk with the person with 700 or 800 in the credit score during inflation? Or am I going to take a person who at the minimum credit score at 640? And even though they have the income is okay, you see, the thing is, lenders rely a lot on credit. And a lot of people say, oh, you could get this loan, you could get that loan, no credit check, no this. Okay. Anybody that tells you no credit check is going to be offering you a higher interest rate. That's again, I believe that. I worked in a bank, and banks have certain interests. But if you are outside and getting small lenders to give you something without credit checks and stuff like that, they have a way to check you, okay? Your license number is a way to run a credit check on you, a background check and things like that. So do not get it twisted that the only thing that you have to run a check on is Social Security, is your Social Security number. So, but yes, they will ask you for that Social Security number, okay? But if they could find you in the systems that they pay other people to find you in, they'll find out the information. So the point is this: go with those people to my no credit check notice, because they taking a risk on people that is already telling them they don't want you to check your credit, so they know the risk is high. So they're going to charge you a higher risk, a higher interest rate risk, right? Because that's the higher risk they take it. So every business go through risk management, has a risk management calculator, basically. They're going to calculate their risk in giving you this loan. So the people who look good in positions that was able to get the loan 3-4 months ago, yeah, that was fine. That was good. But the risk that they have to weigh now during inflation and recession is at a much higher level. So those who are going to get approved for the loan are the ones who are going to be able to move fast, no procrastination, and be in a yes position already, right? And you just going to know it's time, you good. Inflation with these higher interest rates that has happened with what the Feds did was keep pushing up the mortgage rate. It eliminated a lot of people out of buying homes because they could no longer qualify for the loan they went in. So if you qualify for $400,000 a couple of months ago, with the interest rates that went up, now you only qualify for $270,000 and not $400,000. And then once you did put your find a home and put it into contract, and they go ahead and they check and see what your DTI is, well, guess what? You getting less home, more interest rate, at the same time, a higher payment. Less home, more of an interest rate, higher interest rate, and higher payments that you would have gotten. So if you was at $400,000 and your payment was $2,000, right? Didn't seem bad. But now you at $275 because your DTI was higher when you came into the game. So now you at $275 and you put this in, and the bank go ahead and start doing all of this into that. Now your payment is $2,800. So your DTI is fine. It's to the max still for $275 now, and not the $400 you was qualified for before. So it's at the max still at $275, because now your payment, instead of the $2,000 payment, is now a $2,800 payment. So that's $800 more, right? That kicked you out of the game or gave you that payment. And guess what happens though? Guess what happens? The $400,000 house that was in better quality Now you're looking at a 275 home that's probably not the quality of the $400,000 house. So now you got to go into a $275,000 house that may need a lot of work. You understand? Rather than a $400,000 house that have less need of more work to do. So it's your choice to choose the 275, even though you're at a max and still paying an extra $800. So that's why a lot of people dropped out of getting the homes. So now you got people now with the interest rate going down, coming back into the game, right? But guess what happened? The credit still took a hit though, because now it's a whole new 30 days, right? 30 days passed, 60 days passed, maybe 90 days passed, and they came back into the game. Now they're going to go through another credit pull and go down lower on their credit. Even though it's a mortgage, even though it was 90 days ago, now it's a hard pull again, right? So lower interest rate, a lower credit rating, right? And hopefully you find something right away to put under contract, because today's prices is not yesterday's prices. And so you got to prove today. In this market right now, you see that if I get approved today, doesn't mean I'm going to be good next month or next 2-3 weeks, right? Because anything could happen. So you got to get in. If you ready, if you really, really ready, you got to get in and get in quick and do what you need to do. So I just wanted to briefly explain to you guys what this inflation is doing. Inflation is causing you to pay higher payments for lesser amount of house. And so inflation is causing you to pay more money for less amount of goods. Okay? So the example of the eggs I gave you. The eggs was 95 cents when you always went to that particular store. Now the same the dozen of eggs is $2.75 a couple of weeks later. And then boom, the next week, not a couple of weeks, but the next week, the very next few days later, the same amount of eggs is $4.75, which means at $4.75, you probably could have got 36 or 18 eggs for that price. But now you still only getting the dozen of eggs for 3 times the price. That's inflation, guys. Supply and demand, higher prices. Still, people are going to need these things that everybody normally buys. Eggs go into a lot of stuff, right? So it means that you need it. A lot of people need a lot of it, right? So therefore, the higher the demand, the higher the money goes. And guess what? The lesser supply, those who have the money to pay will get it. Just like in the market for mortgages. Please by no means think that nobody's looking for homes and nobody's still getting approved and moving forward and closing on their homes, because they are. It's not you, but they are still getting approved for home loans and getting a closing date and closing on their homes. Okay, just know that. And the difference between this market now is this. It's a buyer's market, in addition to the fact that they have more options. The sellers are now willing to pay closing costs. The sellers now are willing to fix things that they wasn't willing to fix before. And so they understand that in order to sell, in order for the deal to work for everybody, everybody has to give something. Let's remember that the last few months, you know what I'm saying, prior, sellers was like, no, we're not doing that. You could fix it. You either get it or you don't. And we're going with the highest offer. We're not paying closing costs. People were foregoing their inspections just to get the property. People were paying $30,000 to $40,000 above, and now they are below. They are underwater with their mortgage because they paid above. So if the appraisal said it was this amount of money, sellers was like, I don't care. I want a contingency that you're going to pay the amount of money less even though the appraisal don't come through, because the banks will ask you, listen, if you want the home, we're only going to offer this amount of money. You have the right to pay the extra amount of money that, it did not appraise for. That's on you. So now they were looking at extra money above the appraisal price they were paying. They were looking at no closing costs and the inspection they was foregoing. I mean, of course, it's a lot of regret buying a home the last couple of months. if you were paying $30,000 to $40,000 above, even if you pay $10,000 above. You know what I'm saying? So my point to you is, just because you're not buying, don't mean nobody else is. Because let me tell you, I'm still looking for properties for my clients, and I'm still seeing my clients getting approved for loans. So word to the wise is, when you are out there, you hold on to your position. You hold on to that yes position. So when you're ready to get into the game, boom, you moving through real smooth. Okay? I told y'all guys before, I got pre-qualified in February, found a property in March, and March 24th, I put in my application, and April 23rd, I closed. April 23rd in 2015. So it doesn't have to be a long process. Once from the time, if I would have had the property the same month I did my application, I would have still closed in 30 days, because I made sure my credit was right. I made sure I saved the money that I need to bring at the closing table. I made sure at the time I was working at the bank, I ended up getting a 1% towards my interest rate. So instead of 4.0 or whatever, I got like 3.2% interest rate on my home. So that was a good thing in 2015. Would be a good thing if it was happening today, but I don't know if anybody gonna see 3%, 3.2. But then again, I still now have 2.8. What is it, 2.79 or 2.8% now? So I don't think people are seeing that. But hey, but always later on refinance if that's what you choose to do. But I hope this wasn't a downer. I know it's been a while since I put a video out. But listen, if you are interested in a credit education course and getting in a yes position, and you're not ready to buy this month and maybe want to buy in the next 2 months, hey, let's take my credit education course and get you in there. Go to AishaMcNeil.com and sign up for that. So when you are in there, you don't have to worry about the lender telling you don't qualify when you expecting them to close on that loan. And for those of you who are looking for a home or want to sell your home, feel free to go to, send me an email at speakyourdesires@AishaMcNeil.com. Most of the information be right down below in my description. So you can always send me an email, say, hey, Aisha, I'm ready to sell my house. Can you help me? Aisha, I'm ready to buy a house. Can you help me? So listen, I'm open. Let's fix that credit, get in a yes position. Or, hey, come on, let's buy that house. Let's sell your house. Let's get the maximum that you can get for it, okay? Because don't get scared if you want to sell your house. There are still people buying homes. Do not get afraid of what you hear on the news. People are still buying homes. So if you're a seller out there, do not get scared and run away. Sell your home. Let's get it on the market and get you your money where you want to, do what you want to do. And buyer, hey, let's get out there. Let's do this thing and stop procrastinating and holding off. Once you get approved for a loan and you're taking 3-4 months, and guess what? A whole nother pre-approval you got to get, a whole nother pre-qualification you got to get. Come on, stop wasting time. Stop wasting time. It's not my time. It's your time. You know what I'm saying? Put yourself in a yes position. Keep it moving and do what you need to do. So as I always say, take life by the throat, make it speak into existence what you desire, and live on your own terms. Get what you want out of life. Speak it into existence, envision it, and make it happen. It can happen just for you. Okay? Later.